right, let's get in the trenches here with reverse ETFs. Now, Sky, I know your audience at T3 totally knows what these trading vehicles are, but I'm worried that some people at the street are a little unfamiliar. So really fast, what are they?
A reverse ETF is a way to protect your portfolio at times, but I like to use it just as a trading vehicle. It feels like these reverse ETFs aren't correlated perfectly. They're all built to almost go to zero, but you could use them intraday. And what these do is when the market's going down, it's a way to trade from the short side if you can't get a borrow. So I want to go through a few of the different sector ETFs to show you that if you are trading intraday and you think it's going to be a bad day, you can make some cash flow there. And if you want to try and hedge, I would be a little skeptical of that. But these vehicles are out there, and guys made a lot of money in the volatility a week ago trading these.
And maybe they aren't good for long-term investments, obviously, but
it's just good to know about them.
Good to know about it. Okay, so let's get to them. I first want to start with the QID, the reverse of the Q. So basically, you're shorting tech here, right?
Right. So basically, you think NASDAQ had a big run, and you think that it could pull in, you go long this QID. If you think that all of a sudden, we're back in rally mode and you want to short this, it drops pretty quick. So I want to show you the quick chart.
And is this a way to play Dell's bad quarter? Or it's too hard
really
to compare?
Well, if you think tech's going to go lower,
yeah.
You buy the QID.
Okay.
If you look at the chart, let me show you how these things move. Obviously a huge move from 48 as high as 64 into that big down move, last week. And now we pulled back the same way the market rallied. So now there's this little inside range here. So if we start to roll over to the downside, these things get above 55, you could see a continuation move if you are a bear. If you're a bull and you think that, we're going to hold this 1180, we're going to go through 1200, NASDAQ's going to continue to lead. We break below, you could short below this 52.
Short the short?
Yeah, short the short, and it can have a move back to 50, but these QIDs are short the NASDAQ.
All right, let's go to the SDS, reverse of the S&P. So with futures indicating a higher open here, how would you be sort of positioning this trade?
Well, if the futures are higher and you think, again, that we're going to go back and probe some of those lower levels, the SDS shorts the S&Ps. And you know what? It's been hard to get a borrow recently on the spider, so some people will buy this. So if you look at the SDS, you'll see this too moves. A lot of guys traded this from the long side when the market broke. Same type of pattern here. It broke above this 24 area, and look what this did. This went from 24 up to about 29. Then it broke this upper range, and now it's coming in to retest this. So with the futures up, this is probably down. Some people who want to get short the market again might try and buy this into this 22, 23 area, but this does move.
Let's go to the VXX. Basically, this is a way to play the VIX, right?
Yes.
So is that a good way to play the fear and volatility? And is that your favorite way, actually?
Mark Sperling, who's one of the leaders on the floor, he loves to trade the VIX. Last week, when everyone was trying to be long, he knew that these things drop really quick. He was trying to short the VIX because he didn't think it would be sustained over that higher level above 40. So the VIX was tells you two things. One, if fear is still in the market, and two, you could trade with it. So if you look at the VIX right now, you'll see that you saw some of the other ETFs drop off. This one hasn't dropped off yet, so that's showing that people aren't convinced that that we're going to start to settle down.
To me, yeah.
So you had a big move that people could have traded long from above this point of reference here of about 27. We did hit this old resistance, and now we're trying to flag here. If we start to rally more, you'll probably see a drop down to retest this. If it holds in here while the market rallies, that's a clue that there's still some more volatility to come. And if it does break above this 36 area, it could have another continued move, because look where this thing has been back in the day. So this could be just a start, which we'll have to figure out down the road.
All right, let's wrap it up this segment with the FAZ, basically short the financial sector. So we were just talking about the financials, wondering which direction they could go. They could really break to the upside or downside. So would you be sort of shorting this in the short term?
Well, I'm not going to get into it because we're running out of time.
Okay.
But if you want to be short the banks, that's the ETF for the banks. This doesn't really correlate great. I've heard of so many problems.